Hi everyone, this is Jace. For today's episode, we'll discuss what could happen to Singapore property in a possible economic downturn. What would this mean to freelancers who are looking to buy or sell houses, or faces challenges paying their mortgages during this COVID-19 period? We are excited to talk to Ryan, a freelance writer for over 15 years and achieved super freelancer status. And he's also currently the editor for 99.co, a popular property website in Singapore. You can check out his previous interview where he and another freelancers, Hari, share about their perspective on financial planning for freelancers in our freelance podcast. So without further ado, let me get Ryan online. Hi Ryan, you want to introduce yourself or say a few words?
Hi everyone. This is Ryan here. So yeah, I have been a freelance writer for around 15 years or so. A lot of my work has been in property and mortgages. I do currently write for 99.co, although someone else is taking over as editor from me now. Uh, I am also on CNA 938. If you listen on weekends, it's 10 to 11. So on those shows, we talk about property as well. It's called Open House.
Wow.
Yeah,
Okay.
on CNA 938. I am very much into the property industry, work with a lot of agents, uh, right down to interior designers, renovators. I've worked with a lot of mortgage brokers as well. I've been with Money Smart, I've been with Go Bear, now with 99. So I've been in this line for a pretty long time.
Right. So Ryan, what do you think could happen to the Singapore property market in this period?
Well, are we speaking first in terms of like investors and landlords, or are we talking about homeowners? So in terms of homeowners, the first thing I can tell you is if you're expecting prices to drop by huge amounts, uh, that's probably not going to happen. Uh, because a lot of you remember in 2017 we had some very aggressive on block sales.
Mm,
Uh, so the developers were buying land at some pretty steep prices, and their margins are already quite low.
mm,
So I wouldn't count on this being one of those events where suddenly you find, rock bottom home prices everywhere. That's probably not likely to happen.
mm,
But that being said, I mean, there are two things that are going for you if you're buying a home. Number one, of course, it keeps prices from rising,
mm,
right? Because affordability is a big issue now. In fact,
mm.
recently, if you heard of this development called the M condo, it's actually in prime region. It's near the Middle Road area. There were units going for like less than 1 million. So we can continue to perhaps see prices maintained at a lower level uh, coming forward over the next year or two at least. Right. We also have a supply overhang ongoing, so developers are looking to clear that inventory. All these things help to even if they don't lower prices, they do help to maintain prices, maybe bring them down a little bit. The other thing that you have going for you is that the home loans are really cheap right now because the Fed has cut interest rates to near zero. So the last time they did this was back in 2008, 2009, after the last global financial crisis. And if you recall, when they did that, home loan rates dropped to like rock bottom levels. And then in fact, at one point, a couple of weeks ago, there was a home loan package on the market that was at like around 1% per annum. So it's been a long time since we've seen interest rates go so low for home loans. And it will stay low just so long as you have a cyber-pegged home loan and the Fed maintains kind of its low interest rates, which it will to stimulate the economy.
Yeah. So do you think now is a good time for people who want to buy a house to consider, or actually they should actually delay the plan for a little bit more?
When you are going to buy a house, okay, so everyone's financial situation is different, but here's a general sort of guideline for you, okay? When you do buy the house, it should not exceed 5 to 7 times your annual household income.
Mm,
Seven is really kind of the limit, okay? So 5 to 7 times your household income, it should not be beyond this amount. And then finally, when you look at the bills, you'll know how much you're going to pay on average every month. They'll work that out for you. When you factor in your mortgage repayments plus your other loan repayments, you should not be paying more than 40% of your monthly income to all these obligations. So if
mm,
you would go beyond these levels, that's probably not a prudent move.
mm. Right. So for freelancers, who may have difficulty this period paying their housing mortgages or, repaying their housing loan, what do you think they can do about it? Should they consider downsizing, etc.?
Before you do something like downsize, you should know that there is
Mm,
loan deferment available. MAS has talked to
mm,
the banks about this. You can
mm,
defer the payment of your loan right up till December 31st. And there's actually two ways you can do it. The first way is to defer the principal portion of your home loan. So your home loan repayment, a part of it goes towards paying down your principal, a part of it goes towards paying the interest. What you can do is you can choose to pay the interest only. So typically that will mean you're paying less than half the usual amount every month. This does mean you're paying more interest in the long run, but if I mean, it's better than having to sell your home, you know. You
mm,
just pay off just the interest
mm,
only right up till
mm,
December 31st. But if
mm,
things are really bad, you can also opt to defer the entire home loan amount, in which case you don't actually need to pay anything until December
mm,
31st. Then and during this time, the interest will only accrue on the principal, not
mm,
on the entire amount. So later on the amount
mm,
is added to your principal and then you pay that off normally. So
mm,
your home loan repayments may go up a little bit after that.
mm,
And
mm.
effectively your loan tenure is effectively stretched by a couple of months because of the deferment. But
Right.
this is a very small cost. I mean, the interest that you pay is very small
Mm,
uh, compared to, you know, having to sell your house on short notice. So
mm, mm,
definitely kind of look at that first.
mm,
If you feel that your situation is really uh, unsustainable, by all means get a deferment uh, while you get an agent to look around and try and sell your home for you because
mm.
it still buys you time.
Right. Yeah, you're right. So how about freelancers who actually has to service their property rental, for example, or who has difficulty in paying their rent, for their property rental for their business? What are some of the support schemes that you see out there that they can potentially consider to actually help them to tide over this period?
If you mean they're renting, like renting a room or
Yeah, like a place, like an office space and things like
right. Okay, on the unfortunately there is less support for tenants than there is for people who are paying an actual mortgage right now.
that. Mm,
Uh, for those who are still renting an office space and so forth, I would ask if that's really necessary at this point. I mean, look at where all of us are working from, right?
mm,
Uh,
mm,
so really, it might be time to consider either like a cheaper version of that, like hot desking or something,
mm,
after the circuit breaker ends, of course.
mm,
Uh, for those of you who are renting a room, uh, that's really tough. There isn't much of a support scheme you can get right now. You can try to negotiate with your landlord. Some landlords
mm,
would prefer lower rental income than a complete vacancy, for example.
mm,
Right? But
mm,
yeah, you may need to look for alternative accommodations. If you are renting a room in a condo, for example, maybe time to look at renting a room in a HDB flat and so
mm,
forth.
mm, mm. I
But yeah,
remember, yeah,
it is a problem. There's not as much support
yeah.
for tenants. Yeah.
Mm. So just now we were talking about housing loan rates that is at all-time low right now, right? How does that affect actually freelancers who are actually servicing the HDB loans, for example?
Doesn't help you at all. HDB
Mm,
loans have been more expensive than private bank loans for over 10 years now. Your HDB loan rate is always 0.1% above the prevailing CPF rate, which
mm,
means you're paying 2.6%. The upsides to an HDB loan are, first of all, that it's consistent.
mm,
I mean, when interest rates start climbing, yours will still be the same. Although, as
mm,
I pointed out, I mean, it's been more expensive than bank loans for
mm,
since like 2009 almost. Uh, the other upside to an HDB loan, if you have one, is that HDB is more lenient. I mean, the banks have a different motive, right? I
mm,
mean, they're about profit, they're a business.
mm,
HDB is about getting people into housing. They
mm,
want to have as many people housed as possible. So they are going to be more tolerant if for some reason you cannot pay that home
mm,
loan. So
mm,
that
mm,
is an important factor to consider.
mm,
By the way, you can refinance from an HDB loan into a bank loan.
mm.
Uh, you cannot go the other way around. So once
Okay.
you switch from HDB loan to a bank loan, you can't later go back to HDB and ask them to take it back. What
Mm,
happened was the 2009 crisis that sent bank loan rates cheaper than HDB loan rates.
mm,
And everyone said, that's a quirk and it's going to go back up to 4% eventually, right?
mm,
The
mm,
problem is that quirk lasted for over 10 years. And then now
mm.
COVID-19 came along and it crashed the interest rates again. So, yeah, it's a bit of a bizarre situation where for a very long time, I mean, bank
Mm,
loan rates end up being lower than HDB rates. Um, but I mean, it does matter. You should be paying attention to how much you are paying into that home loan. Okay?
mm,
Uh, Personally, I can tell you, I don't use CPF to pay my home loan.
mm,
Firstly, because when I sell my house, I'm gonna have to return the money that I use from CPF,
mm,
with the 2.5% interest. I don't want to end up
mm,
in a situation where I sell my house and then
mm,
basically I see zero cash from it because everything kind of goes back to CPF.
mm. I
If
see.
I'm gonna buy private housing, I need at least 5% down in cash, right?
Mm,
Which is no joke lah. 5% of a private property is a lot of money, yeah. And
mm,
I don't want to have no cash in hand and everything kind of locked out in my CPF, right? So that's
mm,
that's one risk I want to be aware of. The second thing is, uh, the CPF special account has
mm,
guaranteed 4% per annum,
mm,
which is really tough to get in like a conventional financial products, because you're getting this 4% regardless of the market situation. The government guarantees it.
mm,
Uh, and I think that if you do have the cash to service your home loan in cash, I mean, pay your home loan in cash, transfer your OA into your SA and get the guaranteed 4%.
mm,
You do that
mm,
for 25, 30 years, you have a huge SA, it's fantastic for your retirement payouts.
mm. Right, right. Yeah. I think that is very useful for freelancers to know that. Actually, a lot of people, I guess a lot of them don't even know the difference between OA and SA, right? Like ordinary account and special account.
Mm. I'd also, I mean, if you have the means, I'm a big fan of private housing. People will say I'm biased because, I do for property portals and all that, but there is a huge advantage in private housing that a lot of people miss, and
Mm,
that is, you have the ability to take a home equity loan. You can do a cash out refi of your property.
mm,
So
mm,
basically, you can take a bank loan using your property as collateral. You can take
mm,
up to like 70, 80% of your property value, appreciated property
mm,
value as a loan. That
mm,
loan is at 1.6% per annum right now.
mm,
1.6% is a ridiculously low interest rate for a loan of that size.
mm, mm,
So you can't do this with an HDB flat. There
mm,
is no cash out refi for an HDB flat.
mm.
So if
Right.
you finish paying off your HDB flat, let's say congratulations, you managed to do it by the age of 50, you paid up your flat.
Mm,
Then later on you get retrenched and you have no money or something. And
mm,
what's your paid up flat gonna do for you? I mean, you have no money, right? Unless
mm,
you're happy to sell your flat, which
mm,
I don't think you are after you're done paying for it for so many years, right?
mm,
If it was a private property, at least you have an option. At least you can, take out a loan
mm.
against the house. At least you have that.
Mm, mm. I remember in our earlier episode, we were actually discussing about having multiple income streams, right? Which we all agree that is very important, but yet, it is something that may be a bit difficult to achieve for some of the freelancers, especially if they're not financially savvy. So for this group of freelancers right now, what would be some of your advice to them to at least get them started to actually create, or to look into, right, creating multiple revenue stream for the future, to guide against the similar things that will happen again.
If your alternative income stream is something that you're gonna do to get money, like a side job or side hustle,
Mm,
by all
mm,
means go for it. If you're thinking of something that's passive income, like an investment you can make to get money,
mm,
uh, well, I mean, that of course depends what the investment is. There's a lot of details that need to be considered,
mm,
but I would be extremely conservative on that front right now.
mm, mm,
Uh, I, for one, intend to save and hold on to as much money as I possibly can during this
mm,
period. I'm not investing it in anything because I don't know
mm,
what direction everything is going in.
mm,
Uh, when I do try to find side income in this period, it's doing other things for money. That I will
mm,
go for. But
mm,
I don't know about investing in anything at this point. I'm not certain.
mm, mm. So how can freelancers better protect ourselves against a recession like this again?
You do need to build up. Well, there is the old rule about building up, 6 months of expenses that still always applies.
Mm,
Uh, by all means, do that. I mean, that really solves a lot of the issues that you're gonna face usually.
mm,
That's one.
mm,
The second thing is really just don't skimp on your insurance.
mm,
Because any kind of accident right now can totally kind of throw you off.
mm,
And you can defer your premiums right now anyway, so
mm,
there's not much excuse to not be
mm,
properly covered. Uh,
mm,
have your 6 months of expenses, make sure you're properly covered. Uh,
mm,
and I guess the only other thing you can do is be more aggressive in trying to find a side hustle right now.
mm. Right, right. Okay, great. Thank you so much, Ryan. Thank you for your time to speak to us today. So, if you enjoy our show, do let us know by clicking the like button or leave a comment below. Check out our Freelance Creative Exchange site and join our Creatives at Work community on Facebook and Instagram. Until then, bye. Have an awesome week.